Hi, everyone. My name's Andy. My channel's Finding Value. If you like making money, subscribe to the channel. Give me a thumbs up for this content. Leave any questions that you guys have in the comment section. I'm going to give a little prelude here. I'm going to go over a gold and silver update. And one of the leading indicators that I use is the housing starts. We are in a real estate expansion phase. We're just entering the expansion phase, which means that we are building more than 1.5 million new homes in America per year. We're going over that 1.5 million into what we call an expansion phase of real estate. That's the upper cycle of the real estate cycle. In this expansion phase, what I've seen in history is that it is inflationary, and inflation spurs a movement in interest rates. So inflation goes up, interest rates chase inflation, and that spurs a rotation of money. And I think what we're seeing is the beginning of that rotation of money out of technology companies into precious metals, which will eventually happen, and into commodities. That's what I propose. One of the indicators that we want to watch is housing starts and real estate prices. If the moratoria ends, and if that has a large impact, because I don't think anyone completely understands how many homes are going to come on the market from that. We don't know. What we do know is that we have a 4 million home shortfall in real estate, and that's what's pushing prices up. We have record low inventories, and we're about to enter an expansion phase of real estate. I don't think the amount of homes that the moratoria could potentially have could disrupt this completely. I don't think it can, but it can dampen the effects of it if we had a bunch of homes come on the market all at once. So it could dampen it. I don't think it can completely derail it. Last housing market, if you were to look backwards, we had inventories that were pretty high, and then we had 10 million delinquent loans come and hit the market. 10 million. I think the entirety of this problem is far less than 3 million. And I don't think it can completely derail it. And we have a 4 million shortfall of new home builds. If these come online, we still need the 4 million in new homes. This will just messy up the short term. I don't think it will disrupt the long term. Perhaps gold and silver are trying to figure out what impact this is going to have on inflation, on housing starts, and all these different things. Maybe that's why it's pulling back still and doesn't really have a direction yet. So I'm going to go into the gold and silver. I'll read the charts, but I wanted to lead in with that so you guys understand kind of where my thought process is. So here's gold and silver. We'll get in here. I'm using GLD as just a way to show you the price of gold because the market's still open, and stock charts doesn't update those charts that frequently in terms of the real price of gold. So GLD, we are heading down still. We're still in this pullback. We need this momentum to change and move to the upside if we want gold to go higher. So it's still in pullback mode. Silver is the same way. It's still in pullback mode a little bit. Doesn't look too bad. And what I'm looking for in these charts is I'm looking for the mining companies to pull back less than the metal. That is showing that it would have strength. If it's pulling back the same, it's saying that it still has strength. And if it's pulling back just a little bit more, remember, these things are leveraged to the price moves. So we're doing okay on SILJ. This is a junior mining index. You would think that a down price in silver would completely blow this thing out. We're not completely blowing out. We're a little bit leveraged to the down move of the price. But it looks like the candlestick body is contracting and the momentum is slowly changing direction, which is a good thing. Here's GDXJ. The same thing is happening there. We're down 2.79%. GLD was down 1.16%. So it is slowing down. We have a nice little wick on the bottom here. It looks like the momentum's slowing a little bit. I wouldn't get too excited yet because there's a lot of momentum still going to the downside. So I'm just waiting. I'm waiting for the turn. I want to see what it looks like. Here's some of the mining companies. This is an exploration company. This one's looking pretty good. We got some wicks on the bottom. It looks like it's coming down, ready to kind of sit here for a little while until the price moves to the upside. So that's Metallic Minerals is a small silver exploration company. Endeavor Silver's a little bit larger silver producer. Again, we're down 5.25%, but the momentum is slowing. It looks like it's kind of chopping out here. We'll see what else it brings us tomorrow and this week. But a lot of these don't look too bad. Here's AG down 2% right here. Discovery Metals down 3.85, which is pretty good for a silver exploration company, a very small one. So looking at it from the silver perspective, I mean, we're going to need gold to move on up. The housing starts are going up. We've got real estate prices moving to the upside. We have low inventories. I think it's just a matter of time. Now, if you look at history says, hey, look, when housing starts go up and we go into an expansion phase, that's roughly about the time gold goes and moves to the upside. I think we are very close. Maybe it's within a year, because remember, these things, it takes time for them to play out sometimes. What I would be doing is I would be looking at companies that you like, position and get ready for the move and just be patient. That's how I kind of operate. If we pull back further, I would continue to just keep adding a little bit. But that's how I view things. If you guys can't see losses in your portfolio, then I would probably wait until we see strength and buy into strength after the turn or bottom. Do we know exactly where that bottom is? I mean, we'll see what the charts tell us, but technical analysis doesn't catch everything. We've got a bunch of mixed signals out there. Keep in mind, we got technology companies rolling over, going down, and we've got some other sectors that are coming out of weakness. We've got interest rates going up. So we've got some sectors like uranium and some other commodity sectors that are looking pretty good. And then we've got the other sectors that are looking like they're going to pull back and could potentially pull back quite a bit. Which one is gold going to follow? I don't know. It depends what it's linked to more. I would say gold is more of a leader, and potentially we could pull back a little bit more. I would be patient, wait for the turn, and then I would probably add and buy into strength after it turns. That's kind of what I like doing. But we're still in pullback mode. I haven't seen a bottom, especially in gold. I think silver is going to be dragged down by gold if gold continues to go lower. So be patient, wait for a bottom. I don't know when that's going to be. I'll monitor it on this channel. I'll let you know what I think. If I see a bottom, I'll continue to give you guys updates on what I see in the charts. But right now, we're still pulling back. I don't see a bottom yet. And just be patient. Subscribe to the channel if you haven't. Give me a thumbs up. Leave comments below. Thank you for listening. This is Finding Value.